hasn't filed 2017 to 18 or 2016 to 17. Hopefully none of you are in that situation, but if you are, those forms and rules will be the same as what we're discussing tonight, and you need to get those done because there are serious repercussions for units that don't get their tax filings done. For instance, if you miss 3 years in a row of your tax filings, you'll lose your nonprofit tax exempt status. Your unit will be disbanded, and that'll be bad. So you do want to make sure that you get any old problems taken care of if there are any. Let's see. Yes, this meeting is being recorded. That's a good opportunity for me to remind everybody of that. So if you don't want to appear in our video, you can feel free to turn off your video. That's fine. But we are recording this training, and it will be available on the 31st site. It'll probably take about a week or two to get it up there, though. But then you will be able to refer back to it and watch it again, or people who couldn't make it to this training will be able to watch it once it's posted. Okay, so taxes, one of the certainties of life, the things that have to be done. Just like you all have to file your own personal taxes every year, you know, you have to file whatever your particular flavor of the 1040 is, maybe a 1040A or a 1040EZ. You got to do that every year, normally by April 15th, but this year by July 15th. So too for nonprofits, same thing. There's a federal tax return for your unit that has to be filed every year. That is either the 990 or the 990N or the 990EZ, 3 different flavors, and we're going to talk about that. There's also a state tax return that has to be filed every year, and that's the 199N or the 199. And then there's another document which has to be filed with the California Attorney General's office, which is called the RRF1. So you're going to have 3 different documents that you need to prepare and get filed with 3 different licensing authorities, so 3 different government entities, okay? So for units with the standard PTA fiscal year, which I believe nowadays is everyone, that fiscal year runs from July 1st through June 30th. And then, as we mentioned, the tax returns are normally due on November 15th. So for the year that we're in right now, the school year that just ended, basically, that fiscal year ends at the end of this month on June 30th. For those of you that are new to your positions, you're the incoming treasurer. Your term of office will start on July 1st, along with the new fiscal year. On July 1st, the 2020-21 fiscal year begins. And then the tax returns for the 2019-20 fiscal year will need to be done by November 15th. But again, that's not what we're going to talk about tonight. What we're talking about tonight are the 2018-19 tax returns that were originally due last November 15th, November 15th of 2019. Okay. If you do need to file an 8868 for the 6-month extension for your future tax years, that's fine. It's a very, very form. It takes like 5 minutes to fill it out. And you need to get that filed by November 15th. And get, you know, when you mail anything to any of these taxing authorities, you should get proof, you know, of delivery. So send it, with FedEx or something like that, where you have a tracking number, or USPS priority mail, where you get a tracking number, and that you can make sure that it was delivered, and you have proof of that, because it is not unheard of for the government to lose it and then send you a letter, months later saying, hey, how come you never, filed your taxes? So it's very handy to be able to say, yes, I did, and I have proof. And I have had that happen. Absolutely. Okay. Normally you just get 1 extension a year. So if you file for that tax extension, that's fine. Your new due date is May 15th of the next year, and you can't get any more time than that. So you got to get it done. The coronavirus, of course, was a special case this year, though, and everyone did get that automatic additional extension to July 15th. So this is what the 8868 looks like. If you wind up needing an extension for the current fiscal year, that you would file by November 15th. Also in the handouts, I emailed everybody who registered for the training a collection of handouts yesterday. Was it yesterday? Maybe it was Monday. But in any event, everyone should have these handouts, which included copies of these forms. So you'll see what they look like. I also included a PDF, a fillable PDF of the RRF1 that you'll be able to use for your 2018-19 taxes. It's the old version of the form, the one that's applicable to the 2018-19 fiscal year and older years. If you go to their website where they have their forms, they only have the new version of the form available on their website now. So in order to file the old version for your older taxes, you use the copy that I emailed to everyone. Or if you didn't get that or anyone else needs it, just let me know and I can certainly email that to anyone who needs it. Okay, so there's a very sharp dividing line in these nonprofit taxes for units normally having annual gross receipts of $50,000 or less, okay? If you're at $50,000 or less, your taxes are very, very easy and very, very fast, especially for these 2018-19 and older tax returns. Starting with the next year ones, they got a little more complicated for units in that under $50,000 range. That's the main change that the Attorney General made. But it's still much easier than being over the $50,000. So if your unit is $50,000 or less, you should thank heavens, and literally your taxes will take like maybe 20 minutes or so to get all three filings done. Very, very easy. If you're at 50,001 or more, then it's more complicated. But even still, it's perfectly doable. And we're going to spend most of the time today probably talking at 50,001 and up range, because the 50,000 and under is so easy that you're not going to need a lot of hand-holding to get that done, all that as well. So if you fall in the 50,000 or less range, you file the federal form 990N. That is an online-only form. It's referred to as the postcard, basically, but it's done online only. You can't print it out and mail it in. And we'll talk about exactly how you do that, but you go to their website, basically, you register, you enter in 8 pieces of information, and that's it. You're done. If you're in the 50,001 and up range, but less than $200,000, which is virtually every unit, but there's very, very few units in the 31st District that are over $200,000 of gross annual receipts. So if you're in that 50,000 to 200,000 range, then you use a 990EZ form for your federal form. That is done on paper. You do it on the computer. There's fillable PDFs that you completed on the computer, but then you have to print it out and mail it in. You don't submit it on their website. The 990EZ is a whole collection of forms. There's multiple forms, and we're going to talk about them all. And it may well exceed more than 20 pages just for the federal one. And it will take several hours at least to complete. But it's still completely doable. I don't want to scare you off. And then again, if you're over 200,000 or if you have more than 500,000 in assets, which I don't think any of you are, then you do a full 990, which is even worse than the 990EZ, but I don't think that'll apply to anyone. So there's a couple of nuances that are very important in figuring out whether you're in the 50,000 and down range or if you're in the 50,001 and up range. So the key question there is, do you normally have gross annual receipts less than or equal to $50,000? So first of all, what are gross receipts? Gross receipts is all money receipts. So it's every penny that comes into your unit except the $6.25 per capita dues, the portion of your membership dues that go to the council, district, state, and national. That money is not considered your money. So if you charge $10 per member and you have to turn around and send $6.25 up the line, you keep $3.75. So the $3.75 that you keep is your income. That's included in gross receipts along with all other money that you receive, but the $6.25 is not. So because you wind up depositing the entire $10 basically in your bank account, you subtract out however many members you have times 625 that you wrote a check to your counsel for, and that is not included in gross annual receipts when you're figuring out if you're below or above the $50,000 threshold. But you do not subtract any other costs or expenses. So if you have a movie night and you bring in $1,000 of revenue from your movie night and you spend $300 on expenses of your movie night, you bought hot dogs and popcorn and whatever else that you sell, you do not subtract the $300, and you do not count only the $700 profit that you made as part of your gross annual receipts. The entire $1,000 that came in the door goes into gross annual receipts. Every penny that comes in the door, except for the per capita membership, is counted in gross annual receipts. And the other key word in that test is normally. So normally basically is a 3-year average of your gross annual receipts. So if you have 1 year where you may, let's say last year, the year in question, that you're going to do your taxes for 2018-19, and during that 2018-19 fiscal year, you had gross annual receipts of $55,000. Now, certainly $55,000 is more than $50,000, okay? But that's not the right question. The right question is, what was your 3-year average? So you look at the tax year in question, which is 2018-19, and the 2 prior years, 2017 and 18 and 2016 and 17. If you only made $40,000 a year during those 2 prior years, your 3-year average is less than 50, even though you might have been over 50 for the tax year in question. And then the answer to this question is no, you do not normally have gross annual receipts. The way the question is written, yes, you normally have gross annual receipts less than 50,000, even though you were over 50,000 for the tax year in question. Okay, so it's that 3-year average that's important. That becomes pertinent a lot of times when a unit has one particularly good year. Maybe you got a generous donation from somebody. Maybe they gave you $5,000, and that pushed you up. Normally, you come in at $47,000 a year, but in 1 year you got a big donation or you got a grant, something like that, where it pushed you over $50,000. That doesn't necessarily mean it pushed you into having to do the 990 EZ. You need to look at the 3-year average if you're close. Now, if every year you do $75,000, then it doesn't matter. You don't have to worry about it. You're going to have to do a 990 EZ. But if you're kind of close to that $50,000 threshold, then you need to look at the 3-year average to see which tax form you need to do. The state tax return works the same way, but there's only 2 flavors instead of 3. There's a 199N for that same 50,000 or less, and it's also done online only, and it's also super easy and fast. Or there's the 199 if you are at 50,001 and up. That's, again, just like the 990 EZ. It's done on paper. Again, you do it on a computer and print it out, but you print it out to paper and mail it in. But once your 990 EZ is done, it's pretty fast and easy to do the 199. The 199 relies almost entirely on what you do in your 990 EZ. So you start with the federal, you do your 990 EZ, and then I'm going to give you in this training tonight, and also it was included in the outline of this training, which I emailed to you all on Monday, I believe it was. That outline is going to give you very specific instructions for where you find certain numbers on your 990 EZ and plug them into your 199. So once you've done the federal one, the state one is easy. Okay, who should prepare your taxes? So a unit can hire a professional tax preparer, okay? Whether or not you should is something that you need to decide. So if you do hire a professional tax preparer, you should expect the cost to be somewhere around $500. It's possible it would be as low as $350. It's possible it would be $650, $750, something like that. But it's typically somewhere around $500. That's a pretty good chunk of change. But if your tax situation is very complex, or you just totally don't feel comfortable doing it, even with this training and the help that's available to you, it is permissible to hire somebody to do it. Make sure that you hire somebody with expertise preparing nonprofit tax returns, okay? Most tax preparers, even CPAs, generally do individual and business tax returns. Those are very, completely different than a nonprofit tax return. They use different forms, they use different rules. So just because somebody is used to doing individual returns or is used to doing corporate returns, business tax returns, that does not mean that they will do a good job on your nonprofit tax returns. You should hire somebody, if you're going to hire somebody at all, hire somebody with experience in doing nonprofit tax returns. Much likely you'll get a better job. I've seen a lot of PTA tax returns that were prepared by CPAs where the unit paid, a pretty penny to have a CPA prepare that tax return, and they were garbage, full of mistakes, wrong forms even sometimes. So there's no guarantee that you're going to get a good job just because the person's a CPA. It needs to be somebody this is what they do, nonprofit tax returns. Okay, like any other expense, it has to be properly authorized by your association or board. So you need to have a vote at a meeting with a quorum to authorize hiring somebody to do your taxes and to pay their bill. Do not hire a professional tax preparer if you qualify to file the 990N 199N. So if your annual gross receipts are normally $50,000 or less, like we talked about, don't hire somebody. Gigantic waste of money. It is so easy to do those tax returns when you're under $50,000 that it's just a complete waste to pay somebody to do it. Do it yourself. I will help you provide the guidance. You'll have all the guidance you need in this training tonight, and it will literally take you like 20 minutes to do all three. Not worth paying somebody $350 or something to get that done for you. Generally, it's not necessary to hire a tax preparer. You can do it if you're willing to put in some time and effort. Okay, the official instructions are pretty good. The IRS publishes instructions for its tax forms. The Franchise Tax Board does as well. They typically go line by line, and they tell you what you need to do. So what I do, when I do this, I have the form opened up in one window on my computer, and I have the instructions opened up in another window on my computer, and I can, as I go down the form filling stuff out, I can look at the instructions and see if anything's changed since the last time I did it, or if there's anything that I need to know in order to do it correctly. Also, assuming that your tax returns were done properly in the past, you can use the prior year's tax return as a guide. That's, something that I think we do at PTA all the time. If it worked last year, we keep doing it. And that, that makes it much easier to do as well. But that's assuming that they were done properly in the past. That is not always a good assumption. It depends. Also, it's best, and really it's the job of the outgoing treasurer to prepare the tax filings. So in theory, those 2018-19 tax returns should have been done by the treasurer in office for 2018-19. On your way out the door, and that's going to be true now too, as the fiscal year ends at the end of this month on June 30th, and let's say the current treasurer is now out, and you're the new treasurer. The old treasurer is still the one that's supposed to be doing these tax returns. It's also the old treasurer's responsibility to prepare your annual financial report, which you're going to need in order to do your taxes, as well as, to make sure that the audit's getting done and to help you out in transitioning into your role as the incoming treasurer. It's much easier for the outgoing treasurer to prepare the tax returns because they are more familiar with what happened during the fiscal year, where the money came from, what it was spent on, how the records are organized, and it's much easier for them to do it than it is for you to do it. But that said, they still need to be done. So if the outgoing treasurer won't do it, sometimes the outgoing treasurer just is tired of PTA. They don't want anything else, they don't want to do anything else for PTA. Maybe they've moved. Whatever. Maybe they got annoyed with other people on the board and they're in a big huff and they don't want to do anything. Sometimes those things happen. It's unfortunate when it does, but the bottom line is the taxes have to be done. So if the outgoing treasurer won't do it, you got to make sure that it gets done because it really does need to be done. So if you're going to be mailing paper forms, again, that's the 990EZ, the 199, and the RRF1. Mail it with a way that provides tracking, preferably, or at least delivery confirmation. We talked about that. USPS priority mail really is the best way to do it, and it costs about $40 or so for all 3 documents. Money well spent, but again, like any other expense, needs to be approved by your board or your association. Hopefully that money was voted out. Okay, so we're going to start off by talking about the RRF1, and then we're going to move into the federal tax return. So this is what the old version of the RRF1 looks like. If you look at it down here, you'll see, you'll see that it says it's the August 2017 revision. That was the last time they had updated this form. And this is the one that you'll be using for the 2018-19 year, as well as any older year, okay? And again, I included in my email to you all the other day a copy of this as a separate PDF that's fillable. So you just fill it out right on that fillable PDF. This is the first page, the actual form, and then there's like 2 or 3 pages of instructions that follow in the PDF as well. You only need to mail in this one page, not the instructions. So it's got some, just identifying information here, the name of your unit, your address, which will be typically your school address, your state charity registration number, otherwise known as your CT number. And again, all of these numbers are found in your bylaws. So if you're wondering, where in the world do I find my state charity registration number or my federal employer ID number right here, anything like that, all of those numbers are found in your bylaws, which you should have a copy of. If you don't, you need to get those and look at those for many purposes, but including it's got all your numbers. So you fill out that information, then you fill in the dates. So this would be for your most recent full accounting period beginning, and it's going to be July 1st. So my finger over the trackpad on this laptop too long, and it automatically advances the page. So your fiscal year began on July 1st, 2018, if we're talking about the 2018-19 fiscal year, and then it ended on June 30th, 2019, okay? If you're doing an older one, same thing, you use the same form, but you just fill in the correct dates. Make sure you get the dates correct, please. We have had instances in the past where that's messed up. If that isn't out in a full year, it will cause all sorts of problems with the Attorney General's office. So you do want to make sure you get the dates correct. Then it's asking you only 2 numbers. Right here, it's asking you for your gross annual revenue. And right here, it's asking you for your total assets. Those are the only $2 type numbers on this entire form. Much easier than the tax returns, as you'll see when we talk about the 990s. And then there's a series of 9 yes/no questions. So you answer the questions, then you put a phone number down here, which should be your phone number, and then there's, you can put in your email address as well. You sign it, or either the president or the treasurer can sign it, your name, your title, and that's it. Then this form is done. So normally you would get the RRF1 from the California Attorney General's office's website. That's what OAG stands for, Office of the Attorney General. But again, only the new forms are available. So if you go to that link and you look, you're only going to find the new version of the RRF1, which is the one that you will use when you do your 2019-20 taxes, but not the one that we're talking about tonight, and not the one that you're going to use for your 2018-19 taxes, okay? In addition, I also included in the handouts a copy of this annotated version of the RRF1, which has all these little hints written in on it. And it tells you what it is these blanks, basically, and some hints about the yes/no questions as well. So you can take a look at that. We're also going to cover that now, and you'll get some information about how you're supposed to fill out this form. For the 9 numbered yes/no questions, for most units, all 9 questions will be no, unless you held a raffle, which is question 7, in which case that one will be yes. So that's true for the large majority of the units, okay? However, you still want to be sure that you read all the questions, because it is possible that in an individual case, some of your units may have questions that are yes. For instance, one of the questions is, did you have any instances of, fraud or misappropriation or embezzlement in your unit? Hopefully, the answer to that is no for all of you, but we do know that there are a couple of units that did experience that, as there are every year. So if you were unfortunate enough to have a situation where somebody stole your money, then the answer to that question is going to be yes. But for most of you, all the questions are going to be no. The only question that's commonly, or at least not very, very seldom, a yes is the question about raffles. And nowadays, raffles are becoming less and less common also. The LAUSD totally frowns on raffles now. They typically won't let you do them on campus. So for most units, you're not doing the raffles anyway. Oh yes, for question number 9, this is a very common source of errors. The question says, let's see. Did your organization have prepared an audited financial statement in accordance with generally accepted accounting principles for the reporting period? And you'd be amazed at just how many treasurers say, well, our unit had our audits. We had our twice-a-year audits like we're supposed to. So I'm going to answer that question, yes. However, that is not the correct answer, because a PTA audit, which is what you guys are having done, is not held in accordance with GAAP, generally accepted accounting principles. So just because you do your normal PTA audits, that does not require or allow a yes answer to question 9. The only way you would have a yes answer to question 9 is if you actually hired an accountant to prepare an audit in accordance with GAAP. And I'm pretty confident in saying that no unit does that. So that's going to be a no for virtually everyone. Also, if you want to check with me before you file your RRF1, especially if you have any yes answers other than number 7, and you want to double check that with me because you think you're right, but you're not 100% sure, feel free to email me a copy of your RRF1, and I'll be happy to take a look at it and give you my opinion on it. My email address, incidentally, is included in the outline that I emailed to all of you right at the beginning of it. It has my name, it has my email address, and it has my cell phone number. So feel free to contact me. If you didn't get that for some reason, my contact information is also listed on the 31st District website. So I'm pretty easy to find. And I'm happy to answer questions. Now, if you want to email me, if you want to send me a bunch of stuff, here are my records, can you do my taxes? The answer to that's going to be no. We have 109 units in the 31st District, and I can't do everybody's taxes. I'm the unit treasurer of my own unit at Granada Hills Charter High School. I have to do my taxes. That's enough. Doing them once. But I am happy to answer questions. I am happy to look at your stuff, that sort of thing. So feel free to reach out if you need any hand-holding. Also, very important, you must include an explanation on a separate sheet of paper for every yes answer to those 9 yes-no questions. So even the raffle one, anything. If you answer any of those questions yes, you need to include a separate sheet of paper with an explanation of exactly what the details are of that yes answer. And if you look at the RRF1 instructions, which again was pages like 2 through 4 of the RRF1 that I emailed you all, the instructions tell you what additional information they want for each question. So it'll say, question number 1, if you answered this yes, make sure you tell us this, that, and the other thing. And then the same thing for all the questions. So it will tell you what they want to know. If you don't do that, if you mark any of the questions yes, and you don't include that separate paper with the explanation, they will deem your RRF1 to be incomplete, and then when the deadline passes, your unit will be delinquent for not having filed a proper RRF1 by the deadline. We've had that happen sometimes with units who held a raffle, and they correctly answered question 7, yes, that they had a raffle, but they didn't include the separate piece of paper with the additional information required, which is the date of the raffle and I think what the revenue was. And if you don't do that, your RF1 is incomplete. If your gross annual revenue is $25,000 or more, there's a filing fee that has to accompany your RRF1. If you're between $25,000 and $100,000, the filing fee is $25. That would be most units. If you're $100,001 or more, up to $250,000, it's a $50 filing fee. So it's not a tremendous amount of money, but you need to be aware of that, because if you do report gross annual revenue over $25,000 or more, and you don't include, your RF1 is incomplete, because you got to include the check if you owe money. Also, this trips up units every year as well. Gross annual revenue is not the same as annual gross receipts. The number we were talking about earlier that you use to determine which tax form you need to file, that's annual gross receipts. Remember, if it's $50,000 or less, you file the easy paperwork. If it's $50,001 or more, it's more complicated. That is a different number than gross annual revenue, which is used only on the RRF1 to determine your filing fee. Your gross annual revenue for purposes of the filing fee is generally less than your annual gross receipts, because you do subtract certain things. Remember, before we talked about, for the annual gross receipts, it's every penny that comes in the door except for your per capita membership. But for this, for gross annual revenue, you also get to subtract your direct expenses of your fundraising events and the cost of your inventory goods sold. So you get that gross annual revenue number from line 9 of your 990 EZ, not from line L. Line L is the annual gross receipts. Line 9 is your gross annual revenue. So make sure that you use that line 9 number from your 990 EZ to figure out if you owe the filing fee or not. We have absolutely had units before that overpaid the filing fee in the past because they thought that their gross annual revenue was, you know, 25,000 or more, or 100,000 even or more, and it wasn't. So maybe they paid 25 instead of 0 as they should have, or maybe they paid 50 instead of 25 as they should have. So you don't want to overpay. It's not a huge sum, but even still, you can rest assured that the Attorney General's office is not going to say, "Oh, you overpaid us," and send you back. So you want to make sure that you calculate that properly. Also, if you look in the instructions, you'll see that it says that if your gross annual revenue or your assets are 25,000 or more, the instructions say that you must include a copy of your 990 with your RRF1. That's basically no longer correct. Hasn't been correct for several years. Correspondence from the Attorney General's office generally states that you only need to include a copy of your tax return if your gross annual revenue is 50,000 or more. Because if it's less, then you only have a 990N, which doesn't have any useful information to include with your RF1 anyway. Okay, so that's why there is that discrepancy there. So we have a question about, do inventory goods include paper plates, cups, etc.? No, inventory goods is a term of art, and it's basically items that you purchase for resale. So the most common examples for PTA of inventory goods is like spiritware. So if you're, especially the T-shirts or hoodies or whatever, for your, with the school's logo and stuff on it, and you buy them for, $20 and you sell them for $30, or, for the hoodies or whatever, those are considered inventory goods, things that you buy to resell, and you subtract the cost of your goods sold. Your fundraising expenses would include other costs of fundraisers. So for instance, if you have a movie night and you buy hot dogs and buns and ketchup and drinks and popcorn and whatever to resell, those would be considered fundraising expenses that you would exclude from gross annual revenue as well. And it may well include the paper plates and stuff if that was part of a fundraiser. If you're using the paper plates for your movie night, even if you're giving them away, every time you sell a hot dog, it includes a plate. That's fine, then that would be included as a direct expense of your fundraiser. But if you're buying paper plates that you're using for hospitality, or you're given to the teachers for classroom parties or something, then it wouldn't. Then that's just a regular expense, not excluded. Okay, so that pretty well covers everything that we need to cover as far as the RRF1 goes for the Attorney General. So you still don't know exactly where you get some of the numbers from, the gross annual receipts, perhaps, the gross annual revenue, or the total assets. But again, that's going to come from your 990. So we're going to talk now about where you get these numbers for your 990 EZ or your 990N, and then that's going to help you fill out the RRF1 as well. Okay, so we already mentioned that if your normal annual gross receipts, and again, now we're back to receipts because we're not talking about the Attorney General's paperwork returns themselves, the federal and state tax returns, which is annual gross receipts, every penny that comes in the door, except for your per capita membership, the $6.25 a member that you pass up the line. These numbers now are no more, you don't exclude the cost of the inventory goods sold, you don't exclude the direct fundraising costs. That was only for the RRF1, okay? So if you're 200,000 or more, or assets of $500,000 or more, you need a full 990, not the 990 EZ. That will hopefully be none of you, okay? Very, very, very few units are in that situation, and if you are, then you may need to hire a tax professional because we're not gonna talk about the full 990 because it really doesn't apply to virtually anyone. We're going to talk about the 990 EZ and the 990N, which is going to cover 99% of the units. If you qualify for a 990N, and remember that's the normal, the 3-year average, annual gross receipts of 50,000 or less, and incidentally, if your unit's only been in existence for less than 3 years, then there's some special rules about how you do that. You don't average it with zeros in the years where you weren't in existence. I don't know if any of you are in that situation, but if you are, you can see me afterwards, email me, and I can point you in the right direction. But that's only if your unit's only been in existence for less than 3 years. So if you qualify to do a 990N, you go to this website and you do it all online. So you go to that website, you click on the button, and it will ask you for 8 pieces of information, 8 very simple pieces of information. And those 8 pieces of information are, for instance, your unit's name, your federal tax ID number, those sorts of information. It's not going to ask you, it doesn't even ask you what your revenue was. Nowhere on that 990N do you type in what your annual gross receipts were. The only thing pertaining to revenue at all is it's going to ask you, to certify that your annual gross receipts are normally 50,000 or less. It's a yes/no question. And you're going to say, if you're in that situation, you're going to say yes. And then you will not enter any financial information on your 990N. It's all just biographical identifying information, your address, your email address, stuff like that. You need to register the first time you file a 990N. If you don't have the login information from your predecessor, then you can still just register yourself to e-file for your unit. It's simple to do right on the website. You'll establish your own little account, and that's it. And then you go through and you file the form online by answering the questions, 8 questions. Okay. If you're normally in that $50,001 to $200,000 range, then, as we discussed, you're going to file a 990 EZ, okay? I'd say about half of our units get to file the 990N because they're 50,000 and below, and the other half have to file a 990 EZ because they're 50,001 and up. So just depending on your unit and how much money you bring in determines which form you need to do. If you're in the 990 EZ range, then you can get the forms from the IRS website. They're fillable PDF forms. You download them and just fill them out on your computer. Make sure that you download the instructions as well. That's a separate PDF. Each form has its own instructions. So the 990 EZ itself has one file as the form, one file as the instructions. The Schedule A, which we'll talk about, one form for the schedule, one form for the Schedule A instructions. So one PDF. So you want to download the instructions as well as the form. make sure that you use the correct year's forms. That's critical. For the tax forms, they have the year printed in big letters, you know, in the upper corner. So right there in the upper right-hand corner, this is the 2018 version of the 990EZ, as it says in the upper left-hand corner. Okay, so if you're doing the, you know, you need to make sure you're using the correct form because that will cause a lot of problems for you if you don't. And we've had that happen too. For the IRS and the FTB, so in other words, for both tax returns, the year printed on the form is the year the fiscal year began. So when you file 2018-19 tax returns, you use 2018 forms because it's the year that the fiscal year began. Okay. Just to confuse you though, the FTB. Sorry. Let me start over. The Attorney General's office, the RRF1, they use a different system. For them, they use the year that the fiscal year ends when they refer to a form. So when they're talking about your 2018-19 RRF1, they're going to call it your 2019 RRF1. And that's going to go along with your 2018 tax returns. All three are covering the 2018 to 19 fiscal year. So you just need to be careful that you don't get confused and use the wrong form. It would be nice if the Attorney General's office would standardize the way it refers to its forms and do it the same way that the IRS and the FTB does, which is the year the fiscal year began, but they don't. For tax returns, particularly on the IRS side, the federal side, the 990EZ and the various other forms that go with it, most of the forms change every year. So that's why it really is important that you use the correct form, okay? If you can't find the correct forms on the IRS website, and that is harder than it sounds sometimes, because they make it difficult sometimes to find the correct forms from the prior tax year. So because, you know, we have that fiscal year and we're doing our taxes oftentimes a little late, a lot of times by the time you're ready to do your taxes and you go to the IRS website, the default forms are the year ahead of the ones that you want. And you have to poke around a little bit to find the older ones that are for the year that you want. But if you can't find them, you can email me. I've got the last couple of years of tax forms on my computer here, and I can email them to you. So if you don't find them on the website, email me, tell me exactly what you want, the year and the form, and I'll email it to you. Yeah, the RRF1 ordinarily doesn't change from year to year. So up until a few months ago, you know, that form, well, we saw the last revision was August of 2017, so it's been used for years. And there haven't been any changes. So up until now, you would just use the same RRF1 form each year, you know, blank, and then you fill in the dates of your fiscal year right on the form like we saw before, okay? And we talked about how they refer to the RRF1s based on the year that the fiscal year ends rather than the year that it begins, like the IRS and the FTB. Okay, for your 990EZ, you will need one or more additional forms, which are called schedule. Okay, so if you're filing a 990EZ, there's a form that's just the 990EZ itself, which you will fill out, and then in addition to that, there's one or more schedules that you also need to fill out and include as a packet of stuff that you'll send to the IRS. So a schedule is a separate form that you must complete and include if required. And most of those change every year as well. So they have a year printed in the upper, you know, right-hand corner, just like the 990EZ, and you need to make sure you use the correct version of the form, okay? Every single unit requires a Schedule A. So in addition to your 990EZ, you'll have a Schedule A. Many units, but certainly not all, will need a Schedule G. Most units, but again, not all, will need a Schedule O. The Schedule O typically does not change from year to year. Schedule O is basically just like a piece of scratch paper. A Schedule O is used to provide additional information that they ask for on certain of the forms. So like your 990EZ, one of the spaces on your form might say, did something happen? If yes, provide an explanation in Schedule O. And then there's a yes and a no checkbox. So you would, check the yes or the no. If you check the yes, then the instructions tell you you need to include certain information in Schedule O. That's what you use Schedule O for, okay? That's why it doesn't really change from year to year. There's just a Schedule O. It doesn't have a year printed on it because it's basically just a blank sheet of paper with lines where you include your explanations. Some lucky units will need a Schedule B. You need a Schedule B if you receive a $5,000 or more donation from a single donor. So if you had a particularly generous donor give you $5,000 or more, then you need to file a Schedule B. Most units are not that fortunate and won't need a Schedule B. You put the schedules in alphabetical order behind your 990EZ when you file it. So you'll have your 990EZ on top, then you'll have Schedule A right behind it. If you have a Schedule B, that'll be next. If you have a Schedule G, that'll be next. And then if you have a Schedule O, that'll be at the end. Most schedules also have their own. You'll download those as well when you download the forms. There is never a filing fee for the federal tax return, so you don't need a check. There's no money. Sometimes you do need some additional documentation though. For instance, if your unit made quote unquote significant changes to your bylaws during the fiscal year, you have to describe below, but you do not include a copy of your bylaws unless you change your unit's name, in which case you do have to include a copy of your bylaws. So every once in a while, a unit will change its name. Typically, well, the most common reason for that is your school becomes a charter school. Not so common anymore, but in a few years ago when there was a lot of schools becoming charter schools, the name of the school added charter to the name, and then the PTA added charter to the name as well. So during the year when that change is made, you need to include a copy of the bylaws reflecting the changed name. But that doesn't happen that much anymore. A significant change includes changes to the name executive board structure, such as the number of members of the executive board, changes to the quorum, etc. It's not at all uncommon that a unit will make significant changes to their bylaws. A lot of times when you update your bylaws, you will change the quorum requirements, or you'll add another vice president, or you'll add an executive vice president, or you'll add or subtract a financial secretary, or some of the optional board positions. So if you do any of that stuff, when you file your tax return covering that year, you need to include that in Schedule O, but not a copy of the bylaws unless it changed the name. And there's more information about all of that in the instructions for 990EZ line 34. So that will give you more examples of changes that constitute a significant change. Okay, so here are some hints for filling out the 990EZ. Make sure that you completely fill out the form. Oh, and I see I spelled out wrong. Make sure you completely fill out the form and make sure you include all the required schedules and attachments. If you're missing anything, your return may be deemed incomplete, okay? And you don't want that. That's like you've never filed it at all. Then you'll get a letter from the IRS saying you're late, you never filed your tax return. So make sure you include everything that needs to be included. Make sure you sign your tax return. If it's not signed, it's not complete. Unless the instructions tell you to leave a line blank, every line should have something in it. So if it's a line that pertains to dollars, you would put a 0. And now I'm going to comment on certain particular lines to provide guidance. These are lines that have tripped up units in the past, so that's why I single them out to talk about them. But just because I don't now or in my outline does not mean that you don't need to complete the line. The basic rule is you got to complete everything on the form. If it doesn't apply, you would either put NA, not applicable, if it's something that just doesn't apply to you, or you would put 0 if it's something asking for $1, but you don't have anything in that category, and, unless the instructions specifically tell you to leave a line blank. Sometimes they do. Sometimes the form will say something like, did something happen? If yes, put the number here. If no, leave blank. Or sometimes it'll say, did something happen? If no, skip lines 12 through 15. If it tells you to skip a line, that means you leave it blank. But unless the instructions tell you to skip a line or to leave it blank, there should be something there. you should round off numbers to the nearest dollar, no cents on your tax form. So everything gets rounded off to the nearest dollar. See general instructions, section H, for more details about just kind of some general principles for filling out the form. And be aware that the forms sometimes change from year to year, including line numbering. So sometimes what used to be for many years line 20 all of a sudden becomes line 21 or line 19 because they added a line or took out a line. So you need to be careful when you're using the last year's tax return as a guide to make sure that you're actually doing apples to apples. You know, make sure you're not just blindly saying, oh, on line 20 it said this, and on, you know, so I'm going to put the same thing down on line 20. Make sure line 20 is still asking for the same thing. And we've had issues with that in the past as well, where they change the line numbering, and then all of a sudden everybody's putting the stuff on the wrong line because they have, like, my instructions or my predecessor's instructions that tell you on line 27, here's where you get that number. But just be aware that next year or the year after that, it may not be line 27 anymore. So that's why I try to update this every year and make sure that I pick up those kind of changes. On line A, on your 990 EZ, make sure you include the fiscal year. So you have to type in July, 1st to June 30th. On line F, the PTA group exemption number is 0646. That's because all of our tax exemptions stem from the California State PTA. We're all subordinate members of the California State PTA, and that's the number. Okay, this is the 990 EZ. We talked about it a little bit before. Up in the kind of the first third of it or so right here is your, just identification information, your name, your address, your tax ID number, phone numbers, stuff like that. And then we get down to, the actual putting in dollars and stuff starting right here on line 1, okay? For line G, the answer is almost certainly going to be cash. That's your counting basis. It's not impossible, but it'd be very unlikely or unusual for any PTA unit to use accrual-based accounting. But if you do, then it would be accrual, but otherwise it's almost certainly going to be cash. Line H is very important. You must either check the box if you're not required to file Schedule B, or include Schedule B if you are required to do so. So remember, we talked about that. You're required to include a Schedule B if you get a $5,000 or more donation from any one person during the course of the year. And sometimes that even might be that same person gives you separate donations. So, if I give you, $500 a month every month during the year, even though each individual donation is $500, during the course of the year, it adds up to $6,000, which is more than $5,000. And there's some special rules that apply to whether or not that counts as, yes, you have to file Schedule B, or no, you don't. Make sure you read the instructions for Schedule B and for that line H to learn whether or not you need to do a Schedule B. But most people for PTAs are not making monthly donations. Most of the time you get a donation as a one-time deal. Somebody gives you money one time. So most of the time you're not dealing with that kind of situation of multiple donations from the same person, but just be aware that there's more complexity there if you are in that situation. But in any event, so you either need a Schedule B. The vast majority of our units do not, because most units don't get $5,000 donations from one person. If you don't need a Schedule B, you must check the box in line H that says Schedule B not required. Even if you don't need a Schedule B, if you forget to check that box, your return will be deemed incomplete because you didn't check the box and you didn't include Schedule B. So it's critical that you check that box. On line J, all of our units are 501c3. That's the section of the tax code that makes us exempt from taxation. For line K, unless your unit is incorporated, which nowadays is very rare and may not be any units left in the 31st district that are incorporated, you're an association. So you check where it says association. If you think you're incorporated and you're not sure, you can ask me and let me know and we can look into that. But almost certainly the answer is you're not incorporated, you're an association. Okay, now we talk about the actual meat and potatoes of the 990 EZ. So we have lines 1 through 9 are your revenue items. So just as a general observation, one of the trickiest parts of doing your entire tax return is listing revenues on the correct line. That it is not self-obvious, at all. So that's why I go through and basically tell you how you do this. My suggestion, and certainly the way that I've always done these tax returns, and I've done these tax returns lots of times. I mean, I start out telling you my history with PTA, but I've been a PTA officer for 8 years. I started in elementary school as a treasurer. I was a treasurer of an elementary school PTA for 2 years. I was also the treasurer of a middle school PTA for 1 year after that, and then the president of that middle school PTA for 2 years after that. I've been the treasurer of the high school PTSA, and the incoming president of the high school PTSA. I was also the council treasurer for the Northwest Valley Council for 2 years, and now I'm the district treasurer in the 31st district. So I've been doing this for a long time, and I've had to do tax returns for all of those units. All of my units, the elementary school, the middle school, and the high school are all over $50,000. So I've had to do a 990 EZ every year in one of those units or another. So I've done these tax returns like, probably 7 times already. When I was the council treasurer, though, the council was under $50,000. So I did get the joy of just being able to do the 990N from my council, which is a joy, let me tell you. If you're in that under $50,000 range, you should be very thankful. Okay, so I suggest starting out with your annual financial report, whether you do it or your predecessor did it for you as they were outgoing. You start out with the annual financial report, which is supposed to list all of your categories of revenue and all of your categories of expenses, and then go through and just assign each one to the appropriate line on the 990 EZ. So I take my financial report and I just start writing in, line 1, line 2, line 3, line 1, line 1, line 3, whatever it is, based on these rules that we're going to talk about, and then you just add it up. So I take my financial report, and then down at the bottom, I say line 1, and I list all of the items that get included on line 1. And then I say line 2, and I list the items that get included on line 2, so that you're breaking down all of those items of revenue into the appropriate line. And then once you've done that, once you've taken your annual financial report and you've allocated every item to one line or another, then it makes it very easy to do your taxes. Now you're just plugging those numbers right into the tax form on the indicated line. And we're going to talk about each of those lines. So line 1 is contributions, gifts, grants, and similar amounts received. That's what it's called on the form. So some things are completely obvious. Express donations. So when a family gives the unit a donation check and says, here's $500, that I'm donating to the unit. That obviously goes on line 1. It's a contribution, gift, grant, and similar amount received, okay? But other common items that get included on line 1 as well aren't quite as obvious. So for instance, the money that you get from restaurant dine-outs, I assume most units probably do those, where the restaurant donates a certain percentage of sales on a given day from everybody, all your supporters who show up with the flyer. That's considered a donation as well, because it's the restaurant donating the money to you. Even though you got to get your family members out there with the flyer to generate that money, that's still considered a donation. Money that you get from things like Kroger's Community Rewards, for people who shop at Ralph's, they choose your charity and link it to their Ralph's Rewards card, and then Kroger sends you a quarterly check for a percentage of that, those sales. That's considered a donation from Kroger, so it gets included into line 1 as well. eScript, for those of you that are still participating in eScript, that's considered a donation too. Box tops, if you're clipping the box tops, or nowadays the newfangled way is with the app, and your parents scan the receipt when they buy something with a box top on it, and it's electronically done. Those are all considered donations, and they get included on line 1. Also, not at all intuitively, and also often done incorrectly, your unit share of membership dues goes there as well. Okay, a lot of units get that wrong. They think that it goes on line 3, which we'll talk about in a second, because that actually refers to membership dues, but it doesn't. For technical reasons, the unit share of the membership dues goes on line 1. That's considered a donation, and which also means that it's tax deductible for all your members. So if your members buy, all, mom, dad, junior and junior sibling membership in the PTA, whatever that costs, that's considered a tax deductible donation if they itemize their deductions for the member, and you list it as on line 1 as a donation. We'll just skip ahead to line 3 here for just a second. It's called membership dues and assessments, but like I just mentioned, that is not the unit share of the membership dues. You do not include that on line 3. Line 3 is going to be 0, and the membership dues go on line 1. You might be thinking to yourself, well, he talked about the unit share of the membership. What about the council, district, state, and national share of the membership? Where does that go? The answer to that is that goes nowhere. That's not your money. So the $6.25 per capita share of membership does not get listed on your tax form at all, because you're just basically holding that money in trust for the higher levels of the PTA, and then you remit it to your council directly, and it does not show up on your tax return at all. Not your money. Okay, back to line 2, revenue. This line is for revenue from events that are not fundraising events, but instead are events related to your charitable purpose. So typicals of what gets included on line 2 as program service revenue would be book fairs, if your PTA runs the book fair at the school, and books the revenue and pays Scholastic or whoever that program service revenue is included on line 2. Grad night. If for the middle schools and high schools, if the PTA does the grad night, that revenue is typically treated as program service revenue. You're providing a program for the students, for the school, by putting on grad night, and that money is counted as program service revenue. Open house, back to school night, STEM night, things like that. If you're selling food or, whatever you're doing, different units do different things. Of course, this is all assuming we're ever actually physically back on campus, but hopefully the virus will wind down and things will return back to normal, and we'll be doing these kind of events again. But all of those things would be put on line 2 as program service revenue. Line 4, investment income with interest-bearing bank accounts. Some units have a savings account or an interest-bearing checking account. Typically, that money is interest rates are pitifully low. Usually, it's like 0.1%, and there's not a large balance typically in there. It certainly would not be uncommon that maybe you have $1 or $2 or $10 of interest income, but if you do, it goes on line 4. Line 6 is for gaming and fundraising events. So if you held a raffle or other gaming event, that's included on line 6A and 6C. If you have other fundraising events, that would get listed on line 6B and 6C. If either your gaming revenue exceeds $15,000 gross revenue, which is virtually impossible, unless you just have the biggest raffle ever, you're not going to be anywhere near $15,000 of gross revenue. Or your fundraising events exceed $15,000 gross revenue, and that's pretty common actually for PTAs. You sell World's Finest chocolates, my elementary school used to do that, and we used to sell, maybe $30,000 worth of chocolate, more than that maybe, a little bit. So that's considered a fundraising event. Its primary purpose is to raise revenue for the PTA, and then that would require a Schedule G because you have fundraising event revenue exceeding $15,000. Okay. Line 7 is for inventory sales, like we talked about. That's typically the sale of spiritware, or sometimes polo shirts, or for the charter schools that have optional uniforms. Sometimes the PTA sell those for the school, at least during the summer, for the incoming whether it's sixth graders at a middle school or ninth graders at a high school. So if the PTA sells that kind of goods, where you purchase goods, you hold them, and then you sell them for profit, you know, those are inventory sales, and that gets listed on line 7. And that's typically all of your items of revenue are going to get listed on one of those lines that we already discussed. And then line 9, if I remember correctly, is just going to be the sum, basically, of all of the above. Then we get to lines 10 through 17, which is where you list expenses. And as I say here, generally the best way to list expenses is to include the few that have a specific line here that we're going to talk about. You list those few on that line, and then you include all the rest on line 16. So typically most of your expenses will be on line 16, with the exception of the specific items that we're going to talk about here. Line 10, grants and similar amounts paid. This has 2 separate categories. One category is called payments made to affiliate. Your most common affiliate where this may matter to you is if you make a donation to the 31st District Music Scholarship Program. First of all, thank you very much. It's an excellent program, and we certainly encourage you to do so. So because you're an affiliate of the 31st District, PTSA, when you make a donation to our Music Scholarship Program, that is considered a payment made to an affiliate, so you list it on line 10. Same thing for if you make a Founders Day free will offering, which is basically a donation to the California State PTA that they use for scholarships. We will typically hit you up to make those donations in January or February or so. You'd think by now I'd remember when Founders Day actually is, but it's either in February or March. I apologize for forgetting. But anyway, it's the PTA's birthday. When the PTA was founded, and that was, I want to say, like 121 years ago or so. I forget the exact detail on that as well. But in any event, if you make those Founders Day free will offerings, that gets listed on line 10 as well as a payment made to an affiliate. The other kind of expenditure that would go on line 10 is specific assistance to individuals. The place where that comes into play commonly in PTA units is if you provide assistance to indigent students. A lot of PTAs do. They provide maybe backpacks with some school supplies or gym clothes, like at a middle school or at a high school, to indigent students, homeless students or, poor students, and the PTA provides some financial assistance to those individuals. That would get included in line 10, as well as if you award any scholarships to culminating or graduating students, which also is pretty common, particularly in the middle school and the high school. So if you do any of that stuff, that gets included on line 10 as specific assistance to individuals. And you have to list that on Schedule O, and the instructions will tell you what information you need to include. You don't typically include the name of the individuals, obviously aid to indigent students and the like. You wouldn't want to single out the names of anybody receiving that assistance because your tax returns are public documents. So with the exception of part of Schedule B, after you file your tax returns, they're made publicly available. The IRS makes them publicly available on its website, and anybody can get a copy of those. So you want to be careful not to include confidential information in the public parts of your tax returns. So when you look in the instructions, it'll tell you what you need to include. Basically, you break out separately payments made to affiliates with an aggregate amount, as well as specific assistance to individuals with an aggregate amount, and then a brief description of what you were doing. On line 13, professional fees paid to independent contractors. That's where you would list if you hire an accountant to prepare your tax returns, or you have to hire a lawyer to do something for you. Those kinds of professional services, that's where you include that, is on line 13. But line 16, other expenses, as I mentioned before, is typically where you just include the vast majority of your expenses. And then you break that down on Schedule O. So you would say, $85,000, on line 16, and then on Schedule O, you would break it down typically on a category level, like what I have included here. You wouldn't say we spent $1.95 buying a roll of tape. You would say, we spent $1,000 on operating expenses, and we spent $20,000 on fundraising expenses that are not included elsewhere. If your fundraising was included on Schedule G, for instance, and then listed on line 7B, I believe is where the expenses go, that you don't double list it. If it's already listed in one place, then you don't list it here, but there's certain kinds of fundraising expenses that wouldn't have been listed elsewhere, and then you would include them here. Leadership training, school instructional support, school site support, school events. Those are the kinds of broad categories that you would break your line 16 expenditures down to. Excuse me. Okay. Here are some hints for filling out the schedules, just like what we just talked about with filling out the 990 EZ itself. For Schedule A, needed by every unit filing a 990 EZ. So if you're filing a 990 EZ, you got to file a Schedule A. On Part 1, you check box 10. This is asking basically the reason, the section of the tax code that makes you a nonprofit tax-exempt organization. And for all of us, PTA units, you check box 10. Be careful. Prior to 2016, this was box 9. So don't check box 9 by mistake. If you dig out your 2015 tax return and you're going to use it as a template, they check box 9, but now it's box 10. So you need to, that's long enough ago now where it's unlikely you're going to be using a 4-year-old tax return as a template, but just in case, this is just another example, like I talked about before, of how you have to be careful not to just blindly follow past year's tax returns, because if the line numbers change, that'll leave you filling it out incorrectly. Also, a mistake that I see far too often, a PTA is not a school. So do not check box 2. Box 2 is if you're a school. We're not a school. So you don't check box 2. I've even seen, like I talked about before, the CPAs, sometimes the units hire to do their tax returns for them, and I've seen them check box 2 incorrectly. That is not correct. We are not a school. Because you check box 10, the instructions will tell you that you complete part 3, not part 2. So it'll tell you next to box 10, it'll say, skip to part 3, and then that's what you do. So this is the first page of Schedule A. That's where you, check box 10. And then when you get to part 3, which is right here on, I believe, page 3, here are the hints for filling out part 3. You complete all of the boxes for the current tax year, which is column E. So if you're filling out this for the 2018-19 year, you put the 2018-19 fiscal numbers on column E, and then columns A through D are the 4 prior tax years. So if we're doing 2018-19 in column E, it'll be 2017-18 in column D, 2016-17 in column, what am I up to? The C, and so on and so forth. And the place where you get that is from the prior year's tax return. So you take the prior year's tax return, and then basically what used to be in column E on last year's tax return will go in column D on this year's tax return, and so on and so forth. So you just shift everything over one column, and then that'll have your past 4 years listed on that prior tax return. You just type the numbers right out of your Schedule A from last year when you're doing the Schedule A for this year. Oops. And then you just add each row going across, and you put that total in column F. You sum each column going down, and you put that number in rows 6, 7C, 8F, and 13. Okay. Now, if you're a new-ish unit in your first 5 years of existence, so you've only been around for 2 years or 3 years or 4 years, that's fine. Then you check the box on line 14 and you stop after you've done that. So you won't have 5 full years of history if you haven't even been around for 5 years. But for all the other units that have been around for at least 5 years, lines 15 and 16 will almost certainly be 100%, and lines 17 and 18 will be 0%. Then you check the box on line 19A, and you stop. Okay, so it really is pretty simple. I realize it sounds a little complicated when I'm just droning on here, but all of these points that I'm making today in this presentation are also in that outline that I emailed to you the other day. So you'll be able to refer back to that, and all of this stuff about this line, you get the numbers from here and there, is in that outline as well. So you'll have it all in written form already in that the outline that I emailed to you. Okay, Schedule G, we talked about briefly. If you had over $15,000 of gaming activities, unlikely, or over $15,000 of fundraising activities, very possible, then you need a Schedule G. If you do need a Schedule G, you skip Part 1. Part 1 is not for you. You fill out Part 2 if your fundraising activities gross income is over $15,000. Part 3 is only if your gaming activities are, which is extraordinarily unlikely for any of you. And then Part 4 is only if you need to explain anything from Part 2 or Part 3. Part 4 is kind of the equivalent of Schedule O. It's just a blank space for you to add explanatory information if it asks for anything. And this is what page 2 of Schedule G looks like. So Part 2, the part talking about the fundraising activities, is the top half. And then Part 3, dealing with the gaming activities, is the bottom half. So that's what that'll look like if you need to do that. Schedule O, supplemental information, like we talked about, that's basically just the scratch paper for providing additional information where that is called for. Yes, chocolate sales, popcorn sales, holiday sales, those are typically going to be considered fundraising activities. Their purpose is to raise revenue, and if they add up to more than $15,000, then you'd fill out a Schedule G. That is correct. If you're using Schedule O because you have to provide required additional information, make sure you specify what that information pertains to. On Schedule O, you type in something that looks like this. You type in Form 990 EZ, Part 1, Line 10, grants and similar amounts paid. So it's kind of the section heading of that line that you're providing the additional information for. And then you include the additional information right below that. So if it tells you to break down the amount that was paid to affiliates versus the amount that was assistance to specific individuals, you do that under the heading. They need to be able to look at that and see, what are you talking about? And that's what you'll do exactly the same thing for each line of the 990 EZ that requires elaboration on Schedule O. It's fairly common that you might have like 2 or 3 lines on 990 EZ that require additional information in Schedule O, and you'll just have the same kind of heading for each thing on Schedule O. Okay? So that's what Schedule O looks like. As you can see, literally, basically just a lined piece of paper, except it asks you right here the name of the organization and your federal tax ID number. You put that in. Every schedule will require that, and it's in case the papers get separated at the IRS, they want to make sure that they can match it up to what return it belongs to. But other than just putting in your unit name and your tax ID number, everything else is just blank, and you just type in whatever it is you need to type in. Okay, so that covered the federal tax return. Now you're all experts in preparing your federal tax return. And now we're going to move on to the state tax return, which is going to either be your 199N if you were able to file a 990N under 50,000 or 50,000 or less, or it's going to be a 199 if you had to file a 990 EZ. So again, if you qualify for the 990N, then you also qualify for the 199N. The test is exactly the same. So if you get the easy version of the federal form, you also get the easy version of the state form. If you don't, then you don't for either form. It's always going to be both or none. Just like with the federal, you just go to this website address and you click on the link, and same kind of thing. You also only need basic information: your name, your address, your state your franchise tax board number, which is also in your bylaws, that kind of thing. Except unlike the federal one, this is going to ask you your actual annual gross receipts. So that is the $1 number that will get entered on the 199N. Okay. If you have to file a full 199, the paper version works pretty much like the federal version that we've talked about. The Form 199 is available as a fillable PDF on the Franchise Tax Board website. Again, make sure you use the correct year, just like the IRS. The year is based on the starting year of the fiscal year. So again, for the 2018-19 fiscal year, it's going to be the 2018 version of both the federal form and the state form. Just like the federal side, the 199 also requires a schedule. But unlike the federal side, the state schedule is not a form. So unlike the 990EZ, where there was a Schedule A, a Schedule B, a Schedule G, Schedule O, the quote-unquote schedule for the 199 is just an attachment that you type up with additional information called for by certain lines. It basically works the same way as a Schedule O does for the 990EZ. But instead of them giving you a blank sheet of lined paper like the Schedule O, you just go to Word or Docs or whatever you use for, for typing out things, and you just caption it, schedule for 199, and include the year. So it'll be, the Topeka Street Elementary PTA 2018 Form 199 schedule. That's what you type on there, and then you just put a little section heading every time it asks you for something. So as you're doing your taxes, if the Form 199 says, provide additional information in a schedule, or if my instructions here that we're going to talk about tells you that you need to include information on the schedule, then just like you did on the Schedule O, you would type in, 2018-19 Form 199, line 27, blah, 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 and then you would include the information right there. So they know what the information pertains to, and then whatever the information is. Piece of cake. Just like on the federal side, there's no filing fee for a state tax return. Okay, so you don't need to include a check with this one either, but they'll trip you up a little if you're not careful. You must check the box on Form 199, line L. That box basically says, do you have to pay the filing fee? Because unlike the federal side, where no nonprofit has to pay a filing fee, on the state side, some nonprofits do have to pay a filing fee, but we do not. Certain kinds are exempt, including us. So if you forget to check the box on line L, they will send you a past due bill for the filing fee, which you will then have to sort out with them. Okay, so always best to avoid problems rather than having to solve the problems after you've created them. So make sure you check the box on line L on the 199, and then they won't be expecting any money. Typically, you include a complete copy of your 990EZ, including all the schedules, with your 199. If you made significant changes to your bylaws during the fiscal year, unlike the federal side, you do need to include a copy of the revised bylaws with your 199 as well. Remember, on the federal side, you only need to include a summary of the changes, which you put on Schedule O, unless you change your name. On the state side, any significant changes to your bylaws during the fiscal year requires you to include a copy of the revised bylaws with your 199. And now some hints for filling out the 199. In the heading, don't forget the fiscal year dates at the very, very top. Sometimes people don't see that and they omit that. Let's see, here's the form right here, and way up here, where it's easy to lose, is where you type in the beginning date and the ending date of the fiscal year. Hopefully you all can see my mouse pointer there. So it kind of blends in with the heading, the title of the form, and people miss that sometimes. So make sure you get, right here, make sure you get July 1st, 2018, and then right here, June 30th, 2019 for the 2018-19 year, okay? The California corporation number is the 7-digit number starting with an 8 that the FTB, the Franchise Tax Board, assigned to your unit. Like all such numbers, it's listed in your bylaws. So that's where you go to find your number, unless you just have last year's tax return that you're going to take it off of. For almost all units, lines A through C are all no, unless this is your very first tax return because you're a brand new unit, or if it's an amended tax return because you made a mistake when you did it the first time and now you need to replace it with a revised version. But unless one of those two situations apply, it's going to be no for lines A through C. Line D, you're going to leave blank unless this will be your unit's last tax return, meaning that you're disbanding, which is not typically going to be the case for any of you, because for disbanding units, typically there's no officers and we do your tax return, your final one. Line E, again, almost all units use cash basis tax accounting. So that's going to be cash for line E, almost certainly. Line F, you check box 4, which is other 990 series. Line G is no, line H is yes. And the parent name is the California Congress Parents and Teachers, Inc. That's the old name of the California State PTA before it was changed around 1973. But this is still the name that was on the official IRS tax exemption when it was issued in like 1943. So that's why you put California Congress Parents and Teachers, Inc. as the parent's name. This is the Form 199. This is the first page of it. I guess I don't have the second page here, but both are included in the handouts. So you'll be able to take a look at that. Here's some more information on particular lines. Line I, you answer yes if you had significant changes to your bylaws, and then don't forget to include a copy of your revised bylaws with your filing. Lines J and K, no. Line L, we already talked about. Check the box. I don't know how to say it any more plainly than that. As long as you check the box, no filing fee is required. If you forget to check the box, they'll send you a bill for $10 plus a late fee. Line M through P for almost all units, it's going to be no for all 4. Again, if you have any question or you think that maybe it's going to be yes for one of you because you're in some weird situation, feel free to ask me before you send it in. Okay, then we get down to the numbers, the numbered lines, which just like on the 990 EZ are calling for dollars. So on line 1, you're going to go to your 990 EZ and you're going to add up lines 2, 6A, 6B, 7A, and 4. And you're going to list that as line 1. See, just like I told you, once you've done your 990 EZ, doing the state tax return is very easy because you just follow these instructions and just plug in the numbers like it tells you to do. Line 2 is the units portion of the membership dues. Line 3 is you take your 990 EZ line 1 and you subtract your 199 line 2, which is that unit share of the membership dues, and you list that on line 3. And then, you'll see there's some instructions there. If you did have to file a 990 EZ Schedule B because you had a donation from a single donor of $5,000 or more, then you need to include the donation date, amount, name and address of the donor in the 199 schedule listed as Part 1, Line 3. Okay, for most of you, that won't apply. Line 4, you just add up lines 1 to 3. Lines 5 through 7 are 0. Lines 11 through 17 are 0. And then when you get to the page 2, Part 2, lines 1 and 3 through 6 are all 0. Line 2, you just list the amount on line 4 of your 990 EZ. Line 7, you add up these lines right here, your 990 EZ, lines 2, 6A, 6B, and 7A. And then on your 199 schedule, you type in a heading of Part 2, Line 7, income from special events, and then whatever that total was of those 4 lines, you include that dollar figure right there. Line 8, you add up lines 1 through 7. Line 9, you take it right off of your 990 EZ line 10, and then you list that on your schedule as Part 2, line 9, contributions, gifts, grants, and similar amounts paid with the dollar amount. Line 17, you add up your 990 EZ line 17, 6C, and 7B, and then you list it on your schedule, just like it says, Part 2, line 17, other expenses, and you basically list it very similarly to Schedule O, line 16. You break it down by categories, except you need to also add the amounts from your 990 EZ line 6C and 6C and 7B to your fundraising expenses. Then on side 2, Schedule L, for most units, you're only going to complete lines 1, 13, and 22, which are all going to be the same number, and it's going to come right from your 990 EZ Part 2. Okay, and now you're basically done. Don't forget to upload your 990 EZ, your 199, and your RRF1 to PTA EZ. So as you hopefully already know, PTA EZ provides a document archival system for every PTA unit. You do not need to pay anything for it. You do not need to subscribe to the accounting functions of PTA EZ in order to be able to upload your documents. It's a way of safeguarding your documents for future board members. It is unfortunately not uncommon that a unit might get a letter from the Attorney General's office or a letter from the IRS or a letter from the Franchise Tax Board years in the future saying, dear so-and-so unit, you never filed your RRF1 from 2014, or you never filed your 2014 federal tax return. You know, you must do so immediately and pay fees or whatever. So, and that always is a major pain, major hassle, because a lot of times, for some reason, they don't notice for like years and years and years. The Attorney General's office is the worst at this. You know, when I was the president at Nobel Middle School, I got one of those letters from the Attorney General's office pertaining to a supposedly missing federal tax return copy that was supposed to be included with an RF1 from literally like 5 or 6 years before. And then good luck trying to find that if you have to go rummaging around through boxes worth of unfiled documents that you inherited from your predecessor. And even worse, sometimes that paper stuff just gets lost altogether. So if you upload your documents to PTA EZ, no one will have to ever worry about being able to find them again because they will be stored in the system. And you can, look back, 6, 7, 8, 9 years to print out stuff, with no problem. If you don't upload the documents to PTA EZ, then you need to give 2 copies of all of these, your 990 EZ, your 199, and your RF1 to your council treasurer, just like other kinds of documents like your budget, your annual financial report, your audits, all of that kind of stuff. As you hopefully learned in the treasurer training, you need to give 2 copies of every one of these important documents to your council treasurer. But if you upload it to PTA EZ, you don't need to give the physical paper copies to your council treasurer. So it's much better to just upload it to PTA EZ. But it's always a good idea to, once you do that, you upload it to PTA EZ, email your council treasurer and let them know that you just uploaded stuff to PTA EZ, whatever it is, your tax returns, your RF1, whatever, because usually the council treasurers will have a spreadsheet and they keep track of which units turned in which documents. And if you turn it in paper, they mark it off. But if you just upload it, unless you tell them, they won't know. And it's a lot more work for them if they have to go looking in PTA EZ to see if you did it or not. So shoot them an email, tell them you uploaded it, after you upload it, and I assure you your successor will greatly appreciate it, if you do that. If you have any questions about how to do that, you can contact me, you can email me. You should be able to get login credentials for PTA EZ from your unit president. But if you have any problems getting that, I can create a login credential for you that will enable you to upload documents to PTA EZ. Just shoot me an email, and I'll be happy to do that. So I have actually run out of stuff to say, and I'm actually 17 minutes early, which is a shocker. Typically, I go way past the time. Rather than trying to turn on your microphones, if anyone has any questions, just type it into the chat, and I'll give everybody a minute or two to do that. And I'll be happy to answer any questions. If they're general interest type questions that everybody would be interested in, then I'll answer it now. If they're something that really only pertains to your unit because you've got some weird situation, best to just email me separately, and that way I can just address your question without making everybody else listen to some weird situation. While you are perhaps typing in questions, if you have any questions, let me briefly just tell you a little bit about what changed with the RF1 and the Attorney General rules so that you'll know for next year's tax returns, which you'll be doing, no later than November 15th, unless you get the extension of time. So now we're talking about 2019-20 tax filings. So on the tax side, it's the same. The 990EZ, the 199, that stuff didn't change. What changed is on the Attorney General side with the RRF1. So there's two main things that changed from 2018-19 and before, going forward to 2019-20 in the future. Okay, so one change is that everybody needs to track and report non-cash contributions. And I should say non-cash contributions. Basically, non-cash contributions does not mean if somebody gives you a check or somebody gives you a credit card payment for something. That's not non-cash. That non-cash contribution basically means non-monetary non-monetary donation. So if you're having a silent auction and you hit up the local businesses to donate gift cards or to donate, goods or whatever, and you're gonna, auction them off at your annual event, something like that, or, whatever kinds of non-monetary donations you hit up businesses or individuals for, you need to keep track of that. And that's effective with the 2019-20 year. We try to communicate that at the beginning of the fiscal year when they made these changes. We were actually several months into the year when they even came out with this stuff. But the existing treasurer should know that already, and that they should be keeping track of that. So that, when people gave you donations of, a signed football jersey or whatever to auction off, you need to keep a list of those kinds of donations and their, fair market value, because when you file your RF1 for the 2019-20 year, it's going to have a new blank on there where it's going to ask you what were your non-cash contributions. And you would need to be able to say either 0 if you didn't get any non-monetary contributions, or you need to be able to say $2,157 or whatever if you did collect that. So if you hit up Ralph's to donate a pallet of bottled water for your 10K run, all of that kind of stuff counts. Anything that's not money, you need to keep track of so that you can report that on your RF1. So that was one of the two significant changes that they made. But that one's not that big a deal. It's just something that you need to know to keep track of. The bigger change is only affects units that are in the easy tax situation. If you're in that 50,000 and below range where you can file the 990N and the 199N, there's a new Attorney General form that you need to file in addition to your RF1. You will still file the RF1, but in addition to that, there's a new form called the CTTR1, which you also need to report. That's the Charitable Trust Treasurer Report 1. And basically the CTTR1 is a kind of mini tax return that the units that are in the simple tax situation of being able to file the 990N and 199N are required to file. The reason for that is, again, you'll remember, if you're in the over $50,000 range, you need to include a copy of your 990EZ with your RF1 when you file your RF1 with the Attorney General's office. That becomes public information. They post it on their website so that anybody, looking to investigating you with an eye towards maybe donating to you or whatever, they can see your tax return, which gives them some information about how you spend your money. That's useful for the public. But if you're in the below $50,000 range, you don't need to include a copy of your tax return because you don't really have a tax return. You file that 990N, but there's no useful information on the 990N. It doesn't present any picture of your finances. So there's none of that useful information about your finances is available to the public. So the Attorney General's office addressed that by creating this new CTTR1 form. And again, you only need to do that if you're in the below $50,000 range and filing the 990N. And now they make you do this kind of mini tax return, which kind of breaks your income and your expenses into about 10 different categories on the form, and you fill that out. That provides some of the same information that would normally be found on a 990EZ, even for those units that are in the below $50,000 range. If you're in the over $50,000 range and you're filing a 990EZ, you do not file the CTTR1. None of these changes, other than the non-cash contributions, affects you, and everything for next year will be exactly the same as what we just talked about for last year. So this is only for the half or so of you in the easy 50,000 and below range. Now, in addition to your 990N, 199N, and RRF1 form, you will also have a fourth form, the CTTR1 form, that you will need to fill out and submit. That is more work than it used to be for you units in the easy range, but it's not nearly as much work as for the units in the 990EZ range of over 50,000. So it basically made it more work for you if you were in the easy range before, but still not as much work as if you were in the more complicated range. Hopefully that all makes sense. So in any event, I will be doing another set of tax trainings, much of which will be exactly the same as tonight, covering the new forms as well, though, for the upcoming, for people filing the 2019-20 taxes. But again, remember, those aren't due until November 15th. So, everybody still has another 5 months before they need to worry about the 2019-20 tax filings. And even then, you can file the Form 8868 and get an automatic 6-month tax extension to May 15th of next year. So basically, you don't actually have to file any 2019-20 taxes for another 11 months. So there will be lots of time to cover any changes for the units that need that. Let me take a quick look at the questions here. Is the same true if parents donate a basket to auction off? We would include with the new RF1. Yes, that is true. So that is a non-cash donation. If the parents donate a basket of goodies that you're going to auction off, you would just keep track of that. And by you, I don't necessarily mean you, the treasurer. It could be your fundraising chair or whoever's running the particular event involved. You just need to make sure that it happens. Somebody needs to keep a list. So, and it says, received one, auction basket, fair market value, $75 or whatever, whatever it is. You don't need to micromanage that down to the penny. It's just kind of a good faith estimation of what the fair market value is, which you would probably kind of know anyway, because typically in a silent auction, you would list some kind of, market value on the bid sheet. You'd say this lovely basket with an estimated value of $75, bids start at $45 or whatever. So you just need to keep track of those sorts of donations. If some of our fundraising revenue comes through Square, as a credit card processor, do we need to record the Square fees as expenses if they're deducted before the revenue is received by our bank? Yes, that generally is the way that you would do that. Not everybody necessarily does it that way, but that is the best practice. So if somebody donates $100 to you, and let's say Square charges a 5% fee. Their fee is less than that, but for round numbers, we'll call it a 5% fee, so that you get $95 of that donation and Square keeps the other $5. you would want to record that on your books as a $100 donation, and that would then flow through to the donation line on your tax form. And then you would have an expense of $5 for, Square fees that you would list on there. Even though you're only receiving $95 from Square, technically it's still a $100 donation with $5 worth of fees that you would list as an expense. Yes. All right, so I think everybody has had lots of opportunity to type in a question, and I'm not seeing anything else. So I'm going to assume that that means that all the questions have been answered. Again, this is not your only opportunity to ask questions. I'm always available. A big part of my role as the district treasurer is not only to manage our finances as the district, but also to provide guidance to the 109 unit treasurers and the 6 council treasurers. So at any time, if you have questions, not necessarily just about the taxes, but just in general about being a treasurer, you can feel free. You can check with your council treasurer as well, or you can feel free to email me. Is really the best way to communicate with me, because then I can think about your question a little bit before I answer it. But I'm always happy to address that. If I don't know the answer, I'll find the answer, or I will steer you to the person who does have the information. So with that said, I think we're probably done. So I thank you all for attending. And the recording of this will be on the 31st District website in short order. I hope to actually meet you in person at future events once we are allowed to start doing things in person again. Thank you very much for attending. That's it.